run. One with your life, not behind the scenes, on the streets. The shadows broken, swept away, swept away, swept away. Run with your life, not behind the scenes, on the streets, the shadows broken. Downstairs, the animals are dancing.
All right, ladies and gentlemen, welcome to the session here today. I'm Rodrigo. I'll be here with you and with Nic Chahine, lead trader from the Benzinga Options Inner Circle chat room. That's where he's all day trading with the folks, Monday to Friday, 9 to 5 p.m., and Sundays also from 10 to 12. It's ongoing, guys. It's ongoing. Let me get this thing set up here. A couple shout outs here for some of the folks in the chat. Alex, Dwight, Darren, Richard, what's going on? Scott Garrett, good to see you, man. Neva, Richard. All right, folks. So we're going to be talking about options, trading, education, some technicals. We're going to be taking tickers from the people in the chat as we go, or at the end, whenever Nic, squeezes it in. And we have a packed session, right? We're going to show you what's happening and how you can join what Nic is doing. Some examples. He'll show you how he's using his strategy to help traders weather right now the storm and make profit. So without further ado, let's go ahead and bring on the man himself, Nic Chahine. Believe he's in the building somewhere here.
I am.
Hey man, what's going on?
What is going on? A whole bunch is going on.
Crazy day, man, right?
It was crazy. It was good. That's 2 really good days. By that, I mean not the scoreboard, but how we played it in the chat room, the live room especially. It was hopping, and we had all kinds of bets, up bets, down bets. I started the day short for today, long out in time. And those played out. So I'll go through what happened today in the live room, which he's showing you. Right now it's closed and there's still 100 people in there. I took a picture today, a snapshot of it earlier. I didn't have time to take more pictures. So you'll have to live with that one. And the idea is that we're doing good things in there to help people trade better, help people learn, advance their skills, make fewer mistakes. And today I saved a whole bunch of people from making mistakes. We had a whole bunch of fun, including betting on the close. I missed it by 7 cents on the SPY. There were 2 people close to me, but I was 7 cents away from the close. So it wasn't like guessing. It was an educated guess. And I'll try to share the knowledge with you today to set you on the right course. It's impossible to teach it in one day, but that's what we do every day. So the idea is to do things right most of the time. If we do that, most of you already know how to trade. Most of you already know what decisions to make and what to avoid, yet we still do them. We still fall through the hole of FOMO and greed and all of that. So today, hopefully, we'll try to structure that and tell you how we do it and see if you want to join us to do it. So I think Rodrigo is showing you that part. You want to show them also the resources that they would have once they join, like the chat room. So what you're looking at here from Rodrigo is the live room. That's bonus. That was not part of the plan. I came up with this on the fly and we adopted it as the going thing. So I'm with you every day, all day. From the bell, actually before the bell in the morning to after the bell afternoon, including earnings guesses.
They can private message you here as well, right?
Yeah, there's private message here too. But that is bonus. So don't think that this is it. This is the best part of it, but that's completely bonus. The best part for me, because I get to do this with you and I get to share my screen. And if somebody asks me a complicated question, like today, I was starting to type because they asked me in the chat room, which is not that. I was like, oh, that's a lot of typing. And then I found out they're in the room and they're new. Like, are you in the room? He says, yes. And I was like, all right, let me answer it verbally. And I answered it with like a 15-minute conversation or a 10-minute conversation. Way more effective than me have to try to type it. So this is an effective way. But really, I committed to the chat room, which is open 24/7. Not everybody can come in here or just stay all day. Some people stay all day, but some people pop in and out. We have close to 300. 250 to 320. That's been the range all day, every day. So you can pop in and out. There are no jerks. Everybody's sharing trades. It's not just me talking, everybody. So we have the live room, which was hopping today, including the earnings. I gave my expectations on the CRM and somebody else, I can't remember who it was, earnings, and nailed both of them. They're moving exactly the way I thought they would move. I'll check on them in a little bit and I'll share those with you. And I'll tell you how I got there. And also we have the chat room, which is static and it's open 24/7. You have direct messages there. It's just like a Discord channel minus the noise. It's built by Benzinga, maintained by Benzinga. It's getting better. It can use a little bit refinement, but it does the job very well. Okay. And then you have the write-ups. So once a day, I send out a video with about 15 minutes worth of content and a write-up saying this is a trade that I'd like to do. So today I didn't send the video. I was swamped. I just couldn't. Besides, the message was very simple. I want to give the bird to oil. So I shorted oil in a very safe manner, if you can use the word safe in investing. What did I do? I argued with the USO, and I'll show you how and why. And nothing that will break the piggy bank, but something that's almost binary, like saying, okay, you've had enough oil. Let's get to real life trading. And if I'm wrong, I lose a little bit. And if I'm right, I win quite a bit. So I'll share that with you. But you should expect 1 trade a day, maybe 4 a week in total, and a whole bunch of iron condors, if we can, once we go back to normal trading, a whole bunch of credit put spreads and credit call spreads. What are those? Those are bullish and bearish trades that don't need anything to happen. For example, today I was long a put in the S&P. So I was bearish the S&P, and you know what happened at the open? It went way down, right? So I booked my profits, not perfectly. I left some money on the table. In other words, I booked a little bit early, but I did it on purpose because I was also short the S&P via a different method, which is called a bear call spread, using options, where I don't need a drop to win. I just need it not to go above 4,205 for the SPX. So I thought, okay, I'll let go some of this, knowing that I have more bearish things that are happening. And that bet also won. So sometimes you can't time it perfectly, but I did the right thing, and I'll do it again next time. So today I'm going to give you a peek as to how that whole thing works and see if I can convince you that you too can do just as well and have just as much fun for not a lot of risk out of pocket from you. So we can jump into it anytime. Rodrigo says we can. Can I take the screen? I'm going to say yes.
That looks good.
Okay, this will stop the other person. Yes, stop the other person. All right, where are we? Upstart, there we go. All right, so I'm starting with this on purpose, but first let me share the picture I promised you. This is a screenshot I took earlier today. I don't know, an hour and a half ago. Maybe we can tell what time. Yep, 9:33 my time. So that's earlier today. The comment, these are the people sitting there, 260 people at the time. This is my screen. That's what they're watching, multiple screens. They're watching exactly what you're watching right now, which is multiple screens, but this is the first one. And the conversation, yakety yak, somebody's asking about airlines, and I went through my comments, and then Echo comes in out of the blue. I don't see him here. Echo comes in and says, forgot to thank you earlier for Friday's idea for a put on the SPY for today. So I said I would buy puts for today because I have a feeling we're going to open down, like down 30, 40 points. And that's almost exactly what happened. So that's why I bought the puts. So they bought the puts on Friday, and they paid $270 per contract. Today, they closed them for $436 per contract. So if you did one, the difference between the two, that's how much money they made, in hundreds. So that's quite a bit of money in just the open. They're in the money. So I cut it loose before that. So I didn't ride it all the way like he did. He did better than me, but he didn't have the credit call spread as I did. So that's why I decided to close my trade. So this is the kind of stuff we do. And that is just only the tip of the iceberg. So now what happens on a slower setting? So my personal preference, I prefer to take risks that have lifetime in them. I don't want in and out, in and out, in and out. It's just too busy work for me, too much busy work for me. I prefer a swing trade opportunity. Like when something falls into support, I say, you know what, enough with this, I'm going to go long. I'll give you an example. In the last 3 weeks, I went long Facebook, and I shared it via video, and I shared several setups for it. Let me see. Okay. So I'll go to 240 candles. Okay. So this is Facebook midterm chart. It has a couple of months, 2-3 months worth of data. When it fell into here, I said, this is enough. I don't know if I caught the bottom or not. I said, I'm going long Facebook, and I did the write-up. And I shared multiple ways of going long Facebook. So if you don't know options, I'm just going to speak to the big picture. When you usually go long without options, you buy shares and you hope that it rallies in your favor. You need a rally to win, and that's the only way you can make money. Well, in this case, I said, of course you can do that, but I want to enhance my chances where I would sell some risk. What does that mean? Take an options position, it's called a bull put spread or a credit put spread, this box right there, and say, if Facebook doesn't fall through this box, I make money. That's the only way I can lose money, if Facebook collapses through the box. Meanwhile, if I thought it was going to hold its support, I went long against this candle. I thought that candle was bulletproof. I said that would be my way of going long. This way, I don't even need a rally to win. In fact, the stock can fall another, wherever it was, another 10 to 14% before I can start losing money. So that's method one. That's my preferred method. It's called credit spreads. Selling credit spreads is basically making money off of other people's hope. If somebody thought Facebook was going to collapse, they wanted to buy a bearish position, buy a put or put spread, I'm your guy. Here you go. Take your put spread and go away. And hopefully I'm selling them a losing lottery ticket. So that would be method one. Method two that I would offer in the video is this one, which is needing a rally to win. It's a bullish position, just like the other one, only this one absolutely needs a rally to win, just like buying shares, only a little bit worse. Why? Because time is an element. When you buy shares outright, you can sit on them forever until it goes back up if you choose so. When you buy calls or call spreads, when you buy options, time is your enemy. You need to move. Not only you need to move, you need it soon. And in my case, that's why I like to sell stuff, because if time is my enemy when I buy stuff, therefore time is my friend when I sell stuff. Not willy-nilly, but that's in general. So here we go. Methods: sell a put spread and wait for time to do the work for you. Buy a call spread and hope for a rally. Doing both works. Buying share works. So I shared a video, I shared a setup. It worked. We got a rally. And then Facebook did this. And I said, you know what? I'm going to repeat the same bet. I did, and it worked. And then this happened. And I said, you know what? I'm going to go along again. And this time I just bought straight up calls, and they're up 170% or whatever, because that's my third run. And I was okay to be aggressive with it. And even then, I sold calls against them after the fact. If you don't know what that means, I basically locked some profits. I bought a call. I needed a rally on this last batch. I got it. After the rally, I locked some profits by doing something with the options. So now if it rallies to 210 and it doesn't stop, I've capped my profits at a certain level, which is not a big deal. Okay, so that's the kind of trades that I like to do for myself. And those are the ones I share for the people who cannot be in the live room, who may only be in the chat room whenever they're off of work. So if they want to, they will get the write-up, see it, have a question, they pop into the chat room, not the live room where they can't be there during work, but say at 6 o'clock in the evening or on a Saturday or on a Sunday, they say, hey, Nick, I saw your trade, I took it, I'm kind of in trouble, or I don't understand it. Should I close it? Should I not? That's where the debate goes. And it's 24/7. And I won't be live answering like this, but I will answer all the questions that are in there. So that's the spirit. That's how the service was born. Me sharing credit spreads, and then me adding the chat room to it, the static chat room, the 24/7 open one, and then doing that for 10, 12 years. And then finally I said, you know what, wouldn't it be great if I do a live room? But I didn't know it was going to eat up my entire day. So now my entire day, I'm committed to you. And so far it's been a blast. So I'll continue doing it for as long as it remains as fun as it is. Instant gratification, instant results in learning, instant results in trades, instant results in stopping the mistakes. I had a person in there, their handle is Persia. So on Friday, on Wednesday or Friday, they almost made a mistake with 3 minutes left. And by the time I finished explaining why they should act on it, there was like maybe a minute left. And boom, they closed their puts. They owned puts in the IWM. The IWM is the ETF for small caps with seconds to go. And I said, if you let it close in the money, you're going to wake up short the stock if you don't have shares. So they rushed and closed the position with minutes to spare, actually seconds to spare. So that was good. And other times, like somebody today, they reached out over the weekend. They reached out to me over the weekend. They said, oh my God, I'm in trouble. I own 45 or 50. I think it was 55. They bought 45 puts and then 10 puts based on my note. But it was a lot of puts. That's a lot of puts. And so over the weekend, they were worried because Friday, you know how it ended, super strong. The S&P went to high heaven. So nobody saw it coming. This was, where was it? This was the rally into the close that was too strong. So they bought puts up here. Well, today they did this. If he kept his 50 puts after the open, that was a fat payday for them. I didn't reach out to find out, and I'll send a note. I'm curious now. Hopefully they did. Anyway, my statement was, since you're worried about them, when the market opens, it's going to open down. Take advantage of the drop to lighten up or book fast. Get out of the position fast, because we don't know that they're going to stay down there. Hopefully he did the right thing. Anyway, so the conversation is mid to long term. That's the design. But now the live conversation is there for everything else. Now you can pop into the live room and discuss a long-term chart. I don't mind. I love it. You can ask a general question. What's the difference between the diagonal and the calendar? I did a whole class on it today with minutes to spare to set up trades for CRM and for, gosh, I can't remember the other trade. What is it? Who reports? Nobody? Somebody reported today other than CRM. Not CrowdStrike, is it? Anyway, so I did case studies on both, saying that, be mindful of the difference in premium you're paying for options for this week and next week, and see how you can play around with them. Oh, somebody talked about Chewy, which reports this week, but I don't think today. How they said they were buying a straddle, and I said that wouldn't be something I would do, and if I would do that, I would do it out in time, and I explained why. So it was a whole bunch of lessons on options, things that you can take with you and apply them for a lifetime. And then towards the close, when markets were falling, we bet on the close, and I bet 7 cents away from the close. We had a whole bunch of bets, so it was fun. I didn't guess it. I looked at the open interest. I looked at the volume of options that expire today, and it was clear as day where the market makers would benefit. That didn't work on Friday, because I think they said that Wall Street Bets was in charge of the SPY on Friday to a degree. So it kind of lied to me a little bit. But normally it's a good telltale sign. Anyway, so today we were not blindsided. We were ready for the drop. We knew the ranges throughout the day, and I charted it minute by minute all day long. If somebody followed these arrows, they made a ton of money. You can see. If somebody followed, I deleted them. This arrow, they made money. If somebody chased the breakout here, they made money. This breakout never materialized. This drop was perfect. So this stock market was rallying today, somewhere around 11 o'clock my time, so 1400 Eastern. And I said, don't bite. I'm looking at the options futures contract, and it had a huge knot of resistance above it. I said, I would think the SPY would not break out. In fact, I said, this is vulnerable. And this is what it actually did. I put the arrow beforehand. I have pictures before and after. So these are not after the fact. And this was the arrow there. Look at where they stopped. And then they came back and fell below that. So we keep great levels. If you're interested in becoming a better trader, look at my line here. Watch this. Look how pivotal it is right here. There are no coincidences. If you want to trade actively, or if you just want to learn charts, look at this. You will have ongoing classes all day, every day, to a huge amount of accuracy. Like the concepts, I explain the concepts over and over and over again. We even talked about moving average, about weighted volume indicators, the VWAP, the anchored VWAPs, and what's the difference, and how do I use the moving average. A whole bunch of stuff happened today. I'm really excited about how today worked out, not because of the score. I don't care. I expected it down. I wanted a little bit more down so we can clean up. Now we still have weak points down below from Friday. Like, what's this? Why leave that open? So what do? If we dip down there, I'll get long, because that's when everybody panics and start buying puts. I'll say, okay, I'll try a long. I reserve the right to do that. What is CRM doing? I'll show you what we do, what kind of work we do. Check it out. So this is, I'm going to go with 30-second candles. CRM closed. Okay, here is, whoops, sorry. Here is my note before the close. CRM, I thought down would be easier. These are my notes. Has support at 160 and a half and 157. Look at where, oh, wait, let's go to extended hours. Let's see where it is. 160 and 157 and a half. So it fell into 160 and 157 and a half. It overshot to 154, but it bounced right away. So we were right about the support. I said it has some upside pressure to 164, 165. It will have to cross a whole bunch of resistance. And boom, it went up to 168 and struggled with it. And now it's going but higher than that. So we read the earnings reaction. And I think tomorrow they might linger a little bit above 168. I don't know if they want to commit to 173, but it was in the bargain basement. So if you forced me to trade it once a 6 months, I would have gone long with conviction because it's in the pandemic levels. It's too cheap. It's a good company. So my guess was it could fall, but it has support and will bounce right back. And it has reason to go higher, but it'll have to cut through a lot of resistance. So we'll see how that plays out tomorrow. I cannot remember for the life of me what was the other company. Can somebody help me out? In the chat room, I would appreciate it. HP? No, other than HP. Come on, keep me on my toes. Kathy, I know you can pull it up. Let's go. Okay, I'll figure it out. Let's see here. What else? Okay, so knowing what tools we have is pretty important. So let me back up and start with the tools I use. I'm going to take away all my lines. 1 day, SPY. Now, if somebody told me trade this chart, doesn't matter what it is, what the news around it. Salesforce, yeah, we already talked about it. That's CRM. Thanks, Richard. So if somebody said, here's a chart and didn't tell me anything about it and said, trade it based on the chart, I can trade it with relative accuracy and confidence. I can tell you that right here is not a good starting point. I also told them last week that 421 is the target and they came to 416. 421 may still be the target and we may need to dip in order to do that. I thought we should have stalled on Friday at 408 and 410. We didn't. We sliced through. That was wrong. We paid the price today to a little bit. I think we should dip a little bit more. Even if we get down to 402, 400, 398, I don't know if we will, but if we do, we come back, I would buy the dip or wait until they break the seal here and get to 421, dip and get back to 430 or 431. So that's, yes, thank you, CHPT. So that would be the one, the way I would trade it. Right here, I don't have clues. If I bought calls or bought puts, I'm guessing what tomorrow will happen. Somebody said, what do you think tomorrow will do? It's like, I gave you today. You want me to give you tomorrow? Today I had clues. Right now, that's a doji candle lesson. Doji is a fancy name that Wall Street loves to use to denote indecision. Let me explain it to you. There's another one right here. So the market opens and closes, thank you, about the same level. If you don't know how to read candles, let me give you a quick lesson. The candle has 4 pieces of information. It tells me where it opened, where it closed, what was the high, what was the low. So if I look at it, it opened at one end of the rectangle, that red rectangle. And since it's red, then that means it opened at the top end of the rectangle and it closed at the bottom end. In between, it went as low as this, as high as that, and then they decided, you know what, I have no idea, let's just go back to the middle. So basically, if you want to put English to it, they opened, I love it, no wait, I hate it, no wait, you know what, I have no idea. Let's just go back to where we started, we'll decide tomorrow. And then tomorrow should be a bigger move to account for both, right? So that's the logic. So we have one here, one here. So that's indecisive markets. So they don't know what to do. Do they want to commit to 421 right away, or do they want to go down and then come back to 421? So if I take a position today for tomorrow, I'm guessing I would rather see a commitment. So if I'm guessing, I would take an iron condor position, which is a position where I collect money from bulls and bears and let them fight it out and let time pass and see if I can win from both. So charge points, CHPT. Let's go see how well we did. Where is my write-up on it? I know I did it. There it is. Yay. All right. So a write-up. TradeEtix is a platform that provides data, like algo data and things like that. So I pulled it up and it said bullish. I said, I disagree. I read their data that they provide with my eyes. And I said, your data, you're misreading your own data. I think downside pressure to 11.7. That's 11.7 right here. So my interpretation of their data told me that it's going to fall to 11.7 most likely. It's easier to fall down than to rally. And then I said, although it has support at 13.5. So it came down to 11.7. It's probably going to try to get back up there because of the support. So now it's upside pressure. Tomorrow, the data changes. So tomorrow we can evaluate how it's going to go from there. But usually the reaction to the earnings report is completely binary. But having data and reading at least where the market makers would make money is golden. So how do I come up with this information? Anybody know? You want to care to guess what kind of information am I looking at? And I'll set you on the right path to be able to start learning this stuff if you don't already know. Some people here already know. Some people in my room are unbelievable traders. It's not that I am the best trader in there, but I'm pretty good at teaching and keeping everybody in line and avoiding the mistakes. And I'm pretty good with the levels and the chart patterns and the extensions and expecting the price action this way or that way. So we make a good team. So let me tell you what information I look at. It is it's what is inside an options chain. Let me see if I can share my screen. I think I should do that. Where is it? Do I have one? Let me check. I do have one. So if you don't mind, I'm going to switch screens on you somewhere. New share. Here's a practice platform that I have. Okay, so this is E-Trade practice platform. Say that fast. I don't recommend it. I'm just using it for demonstration purposes. All right, so if we do this, if I look at the platform, seeing the puts and calls. So if you don't know options at all, just a quick study, a quick lay of the land, so to speak. This is called an options chain. This side, they're called puts, and this side, they're called calls. Don't worry about what they do. They are contracts. Each one is a contract. Like this is a contract, this is a contract. Every line is a contract. Same here. And the contracts expired today. That's today's contract. It's dead. These were the prices where it expired. So the stock expired at 413 pretty much. So right here, everything here died for zero. Everything here died for zero. 413, if you didn't buy something that got into the money, like if you didn't buy a call that was below 413, you didn't make money, you lost money. All those hopeful people that thought it would close above 413 lost money. 0, 0, 0, 0, 0. They lost money. All those people that thought it was going to collapse, they lost money. So those who guessed 413-ish had the, or lower on the call side or higher on the put side, had the right idea. So what I do is late in the day to guess where the price, how did I guess it's going to close where it closed, is by just looking at the puts and the calls. So here's the basic idea. You may have heard it called Max Pain theory. This is not quite, but it's based on their concept. So I have issues with the Max Pain theory because the Max Pain theory looks at this column and comes up with a number and this column. Well, the problem with that is that this column is, yes, Friday's data. It's a static number. It does not change. Look at the hundreds of thousands of contracts that came in today. That's volume. So how can you just determine based on this and ignore all of that? So unless there's somebody out there that does what I do, which is doing Max Payne on the fly in my head, I look at this chain and I said, where can I put price to screw everybody? How can I screw as many buyers of puts and calls as I can? Because that's where price is going to want to go, to screw everybody. Everybody says, oh my God, my timing was horrible. I missed it by that much. It's not by mistake. It's by design. Price is going to go to hit everybody. So where can I price it? So if I put it, if I take price up to here, all these call buyers are going to be profitable. Since when do market makers allow for that? If they take it down to here, all of these puts buyers are going to be profitable. So the balance is to find a line where you kill as many calls and as many puts as you can. So there are some people that made money on puts here, but the market makers would have lost more money to get price there. You know what I mean? So they would have cut through 700,000 calls in order to come up all the way to here to kill all these puts. So it doesn't make sense. So that's the concept. You're going to have to watch it and do it, or just be in the group. Sorry about that. And just be part of the fun group. The camaraderie is cool. And we try to find opportunities like that all the time. And then I went off on a tangent to teach the concept on CHPT, for example. I said, so if I wanted to buy a put, I wouldn't buy a put for this week. That's a really important concept. So they reported earnings tonight. They're down 3 or 4% after hours. Today, this is the options chain for today. This week, sorry. June 3rd, it expires in 3 days. Everything here expires in 3 days. Look at this column called implied volatility. So this column is, should I annotate? Let's annotate. Keep saying this column and that column. So this column right here, implied volatility, there are two of them. What is that? That's the premium that is assigned to these prices. These are the prices. The mark is the middle between bid and ask. That's the going rate for this option. Put option is 80 cents, so it's $80 per contract. On the call side, it's 100, so and so forth. So the implied volatility says that these prices are based on this much nervousness, 250% nervousness. Well, for next week, that's 100, a lot cheaper. What does that mean? If I buy a call or a put, if I buy anything on this page, I'm paying a premium almost double what it should be. This is 17 days, different contract. Everything is priced at 120% nervousness. Whee! Meanwhile, everything here is priced at twice the price. So if you want to get a comparison, you know when they say the VIX is high, all options are high? Well, this is the VIX for that particular stock for that particular week. So this is how much nervousness is built into this platform. So the market makers expect a move that is about $2 this way or that way, and they want to make sure that they are collecting enough money in order to make money, because the market makers, they sell things that you buy. So they take the risk. And if they sell it, they want to know they're not going to lose money. How can they not lose money? Is by collecting as much money as possible for that put. So if it falls down, then they build themselves a buffer. Okay. So the simple statement is, if you see a differential between implied volatility of the things you're buying, if you decided to buy a call or a put that week and you look, oh, okay, 3 days, I'm paying 225%, 250% worth of premium. I go out to 2 weeks and it's half of that. I mean, these are dollars more, but they're cheaper because that's the going rate. This is not the going rate. So what happens tomorrow? At the open, this number will get shellacked, gets cut 40%. What does that mean? You will lose 1/3 or more of what you paid just from the open. If it's falling, right? Even if you bought this put, which means you guessed correctly, and it's falling in your way. Right now it's $12.20. So you guessed correctly. Even if you bought that, tomorrow that put will lose 1/3 of its value just from the open. So you will gain some of it back from the price falling, but you just wasted 1/3 of it. So if you had bought The same put out in time, you wouldn't. You would lose maybe 10% from that factor of, okay, the event is gone. Let's take out some of the premium of fear. Well, that fear premium is huge for this week, less huge for next week. In fact, this is what it looks like. Look. So look at the difference. You overpaid by that much. Next week, you overpay by a little bit less, and then that's the going rate. So 220, 210, the premium is a lot more than the one I said I would buy. So what did I suggest to these people? So I said to the group, I said, if you want to bet down, because I just told you, I think it's going down, right? So if you wanted to bet down, I would buy a put for next week or to 17 days at, say, I forgot what I said, 11. That's almost 60 cents. And then I would sell the 11 for this week against it. Well, in this case, there isn't an 11 yet. So I must have said 12 and 11 and a half. I think that's what I said. I said I would buy the 12. So I'll pay 90 cents for this one. And then I'll sell the 11 and a half and collect 50 cents for this one. So the out-of-pocket expense will be like somewhere in the 40 cents. If I do one, it's $40. So what happens tomorrow at the open? This 50 cents is going to get cut faster than this one. This one I bought is going to gain because price is falling. It's going to lose a little bit because of that element of time and surprise. But the one I sold is going to die a lot faster. So overall, the trade should be profitable. So let's see. In case I didn't, I'm going to save it so I can compare it tomorrow. So the order would look like this. I may have it shown into the chart. So the order would look like this. One more time, Nick. There we go. So I'm buying out in time, 17 days, and I'm selling closer now. So these that I sold with a premium. So whoever bought them from me overpaid. I didn't overpay much. I did a little bit, nowhere near as much as this person. So I overpaid a little bit for the 91 cents. They overpaid by a lot. So this thing is going to die in my favor tomorrow. This one is going to most likely increase a little bit in my favor. So this one's going to die. This one's going to increase a little bit. Overall, I'm going to make a lot of money. Well, a lot of money. It's going to be a winning trade. So first, we applied the knowledge of how to read the earnings outcome. Second, I had a whole lesson on how to do it and leverage that differential in implied volatility. And it was live, and I was talking like this, and I had pictures. In fact, CHPT, let me see here. If I go to 120, is it on here? 1 day. Yep, there it is. So I showed them with pictures. In fact, the trade I said was different, slightly different. I had a couple of versions of it. So anyway, that's what happens if that's the thing that you're looking for: camaraderie, education, profit opportunity while you learn, slower trades, ideas as to what to do with stocks. Like somebody said, I have a lot of stock of Tesla or whatever. What can I do? I was like, ooh, we can make thousands every week. Let's talk. So if I'm sitting on a lot of stock, there's so much I can do with it. I can protect it for free. Somebody is stuck in Upstart. You know the story about Upstart. I'm long, by the way, off the bottom. So I don't think anyone has been more successful with Upstart than our group, and I'll tell you why. So anyway, somebody's stuck, buried in Upstart. I showed them how to double down with no money out of pocket by using options. I did disclose it that I've never done it, but I drew how one can do it. It's not recommended for somebody that doesn't know options, but it's definitely worth learning for somebody that's stuck at a stock price that's way, way above current price. I don't condone adding to current risk, doubling down, but that would be one way to double down without money, out of pocket expense. Okay, so Upstart, you know the story. Pretty wild stock, right? Okay, so we traded it here. I thought it was going too flat. I said, this is a violent stock. Look how wild it is. And suddenly it went flat. I said, we're going long. And I suggested a trade, but that was July of 2021. and then it did this. I shared, you can sell a put to own shares, you can buy shares, you can buy calls, you can buy call spread, you can sell a put spread, or any combination of those. And then it did that. Woo, up to 400. What? Oh, yes. I got to share my screen now. I forgot. Thanks for the reminder. John, if it wasn't for John, I'd still be sharing something you guys can't see. All right. So this is Upstart. Daily chart, nothing fancy. I'll hide everything. Right here in July of 2021, I thought this wild action was too quiet. And then it did this. Because we went long here. I wrote it up, video, all kinds of methods to go long. And it did this. And then all along the way, they said, can we go long now? No. And then we went long when it got to here. I went long. I issued the same video. The next day, it was up 17%. The day after that, it was up another 6 or 7%, and then crashed again. So we played it twice, and we won. And then the crash, I want to say we did it one more time, but let's say we didn't. Then this happened. So I said, the crash is misplaced. The stock fell to 60%, even though they grew their sales tremendously, like 150%, 155%. So people were scared about one specific thing. I said, fine, I'm willing to take a risk. So I bought shares, which I rarely do, at 36. People in the room bought them at 29 or 28. So they definitely got a better deal. But since I bought shares and I shared it, they went to 53 twice, including today. So I could have sold calls against them and made money off of that. So I'm just waiting for another burst higher. So here we are, have traded a super violent stock 3 times with no sweat, won all 3 times. So now what with Upstart? Now what? Here's the question. Now what? So if I'm not long, I would wait for the breach of this, because if they take this out today, they almost did. So here's what it alerted me. It triggered today. Look, May 31st. So I'm going to do.
Hey, Nick, really quick here, Nick. I'm getting a lot of emails and questions about the chat room.
Yeah.
Let me just go over this really quick, and then we'll get back here to the session. Is that cool?
Yeah.
Okay. All right, guys. So thanks a lot for sending over these questions. Again, these are from you guys in the wherever you're seeing this. We have about 400 or 500 people here. So I got a couple of the questions that you guys have. All right. So are the sessions on Sundays recorded and posted? Yes, Nick will post them in the chat room so you guys get full access. In the Sunday sessions, he goes over about 150 stocks around there that you guys pick. So does everybody that joined get a free laptop? Yes. If you see a laptop in the checkout, that means that you will get one. And let's see, this for new traders only? No, we have advanced traders and new traders. Everybody works together with Nick. It's a great community. Check it out. What's the chat room schedule? That's Monday to Friday, 9 to 5. Well, 8:30 to 5. And then you have Sundays, 10 a.m. Eastern till noon. And that's pretty much live with Nick. Money back guarantee. Yes, we have a 7-day money back guarantee. So you can pop in there and check it out. And the price at renewal, it will be the same as today. It is the Memorial Day special, 70% off till midnight. And as far as the format of the chat room, that's what I know. Unless Nick added anything else there new that I'm not aware of. Did you?
I don't think so. No, I haven't added anything new. But I did forget to mention earlier that, yes, I do have a 2.5-hour webinar every Sunday for free, where I do homework. Yesterday, I didn't do it, or 2 days ago, I didn't do it. I gave everybody a break, but I did the work. So I send out a form on Fridays saying, give me the charts that you want to see and discuss, and submit your questions. So they submit them, and it's usually about 150 tickers. That's after spending every day sharing my screens.
Yeah, for just to clarify there, folks, it's free for the members of the chat room.
Oh yeah, absolutely. So and then I compile them in a table, and I paste my comments in there in the table, and a link to the chart and a potential trade setup or idea. And I add it to my watch list. But before I do that, I wanted to show you how I just made myself a trade setup. So I said, I'm long already. So if I wasn't long, I would alert myself. So the idea from here is to buy the breakout into the gap, or buy the dip to come at it with some momentum. So I'm going to put an alert to, this is the BD part of the BDBR. BDBR is buy the dip or buy the rip, whichever comes first. So I can buy the dip if I wasn't long. Now I'd be disappointed if it loses this level, but there is a little gap right there, which I hate when they do that. Not every gap fills, but why leave it there? Anyway, so now I have a plan. I have an alert on the way up. I have an alert on the way down. Now I don't have to look at the chart. That's the kind of homework I do for us. So when I do homework, I go back and I enter in my running tab. And these are things I was looking at before Friday. And then Friday, everything went off to high heaven. Tesla, I went long and I shared it in the live room when it was absolutely at the bottom on Thursday night or Wednesday night. I can't remember. I said, I'm buying call in Tesla. They said, which ones? I said, it doesn't matter. I think it's going to run to high heaven from here. And it did rally pretty ferociously, 25%. So whoever bought calls with me made a lot of money. I booked them along the way. I didn't go all the way up, but I had a pretty nice profit. So Tesla can still make 860. And I laid out the scenario today. It's not a guarantee, but if a couple of things happen, 860 should be the target for Tesla on this run. I thought it would be in the low 900s from what I saw 2 days ago. It may still be there, but let's talk about 860. But what needs to happen first? Either a dip into 740, which I would buy, maybe 720, or a breach of today's high. One of the two will get you 860. So if it dips into 720, I would buy the dip with a tight stop. So if I risk $1,000 on that dip, I would say to myself, I'm only willing to lose 200 and then I'm out. Or I just wait and miss out on all the upside, which is totally okay, and buy the breakout from 780. Because if that happens, then I think they can get to 860 and relatively quickly, if not more. 860 would be target one. And if you look left, there's a gap there. Perfect to 860. So why not? Why not? Not many people were looking at it to get to here, and not many people were looking at it to get to there. What were they worried about? The freaking news about Twitter. So anyway, how about we trade the charts and the facts? So we did, and here we are. People are looking to go long Tesla, and we offloaded Tesla, looking to line it up again for another trade. So we try to be agnostic. We try to be impartial, unemotional. The FOMO is terrible. So I try to control the FOMO. So part of it, like for example, I watch 15-second candles throughout the day for us. Why? Because we see 4 candles before somebody else sees one. That's an advantage we can play with. So I say when I drop to 15-second candles, control your emotions, because every candle looks like the end of the world. Like, look at this. Whoa. And every candle looks huge. This was a big candle. Like, what was that all about? Was that when Biden was talking to Powell or whatever? Anyway, so every candle, it's emotions. It causes to do something wrong. For example, if you are trading alone and this happens and you own calls, you go, holy crap, what just happened? And then this happens and you still own those calls. Guess what you're going to do here? I'm out. Look, they lost it. I'm out. Point. They went far. They just stopped you out. So you would make fewer mistakes if you were trading in a group, because my comment would be, it's falling into support. That's not where I get out. On the bounce, I'd get out. I warned all day, be careful of the bounces. They're going to be sold off. Be careful of the bounces. So that's, we try to stop emotions from causing mistakes. Like, that's the natural reaction to just, oh my God, I missed it the first time. I must get out here. So it is, the fear of missing out is a human emotion that is necessary for us to survive in the wild. It's definitely a detriment for us trading, because we end up making decisions at exactly the opposite time we need. So anytime you feel like you need to do something, think about doing the opposite almost, like pull a Costanza. If you know what that is, pop it in the chat. You'll get a flower. No, I'm just kidding. You get nothing. You just get a high five, a virtual high five. All right. So what do we want to do? Give me a ticker. Let's do one of your charts. I know somebody already plopped in AMD. I can answer AMD without opening my eyes. Lucid, I can answer Lucid too. So AMD, at least 4 people had the same exact words because they're listening to me. I've been saying it needs to come out to 104, take it out, fail back down to 100, 98-ish, and then come back and beat 104 convincingly for me to be convinced.
Hey, Nick,
As long
really quick, really quick, just want to give a shout out to JC Trader. Welcome to the family, JC.
JC, I appreciate it. Pop into the chat room, say hello. I'll come and see you in a little bit. So AMD, the short story is I wouldn't get long until it's cleared using 104 as footing. Now, here's the other thing. So timing matters. So AMD, here's the real reason for it. Technically lost an important neckline, which is around 100. 104 can be considered part of it. Look at it. Giant head and shoulders. What's a neckline? Somebody asked me that today in the live room. I said a place that they fought over and it's been significant, like this one. Look, bounce, 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 huge bounce, comes back testing it. Yep, bounce. Yep. And then nope. And now they failed at recovering it one time. This is the second time. This is their second time at that zone, which was a fight before, and it's a fight now. So until the bulls take it out and use it as footing, I'm not confident they regain control. In fact, if you draw a line here, you can see that the bears are in control. They are selling rallies, right? That's not an opinion. Look, rally, dip, rally, dip, rally, dip, rally, dip, rally, dip. This is a rally. Are they going to sell it? And if they lose this one, AMD will be in the mid 60s. I have no doubt in my mind. It will be a great bargain. It's already not expensive now. It's a great company. Products. I just bought 2 AMD machines, so don't be like, oh, what does he know? I know. I've been an Intel user my entire life. These are my 2 brand new machines, top of the line machines, and I have kinks in them. They super fast, but they have kinks. So anyway, if so now the bull has its onus on them to prove that they can actually retake the reins. As it is, the assumption is on the 1-day chart, the bears are in charge. So what about the 15-minute chart? Okay, on the 15-minute chart, it looks like the bulls have been buying dips. So you need that to translate up into the time frame. 30-minute chart, that's not so positive. Rally sold, rally. Prove to me that you don't sell off below 99, below 98. You see what I mean? So if you come down to here, come back to here, and you take that out, okay, I'm on board. Until then, if AMD is rallying, the Qs are rallying, the QQQ. So why do I want to take on that extra headache of this neckline? Similar scenario for NVIDIA. So I won't go there, but it's very similar. Exact same scenario in Bitcoin, which did what I thought it would do. I shared a trade on Bitcoin the other day. Everybody made fun of me. Oh, what? I said, if you don't want to trade Bitcoin using coins, use Bito. And if somebody took the bet the other day, they have money now. They have greens. Okay, Lucid. Disclosure, I don't like the company stock. Car is awesome. Tech is awesome. The company stock fundamentals, the way they are, I don't like them because they keep kicking the can on production and they keep lowering the number of production cars. And they sold whatever, 400, and they have a recall already, which happened to Tesla. That's fine. It's part of growing up. But I personally, I don't want to bet on a company that doesn't have a P&L yet. It's hard for me to say, okay, what's a good value? I don't know. So price action is pretty bullish here. You can see that inverse head and shoulders. So today they tried to poke above it. It did alert me. I'm not lying to you. Look, 531. Look, if I turn it on, it's right there. So what am I going to do? I'm going to raise it to above today's high. So it alerted me. So I came to it and I paid attention. And I did mention it in the live room. So if I'm long Lucid, I can sit comfortably thinking that I could target up to $4 to $5 from the neckline. So 24 is doable. 25 is also doable. Let's get granular. Do they have earnings soon? No. Okay, so here's the neckline that they triggered above today, here and here. And now they have to deal with these. So good progress today. Tomorrow, if they dip into 19, if you wanted to get engaged long and today you wish you were long, that is a good opportunity. Why? Because it could do this. Okay. Tough resistance, but guess what? It's doable. You break through that resistance. Look, I said broke out, potential hiccup, potential hiccup. Those three lines I added today when I mentioned it. This came to fruition. Now this has the opportunity. There's a lot of resistance. So that was support back then. I'm going to say this is a resistance line now. So how do I trade this? I would be comfortable selling a put spread. I would be comfortable selling a put to own shares. Not me, somebody that wants to own shares. I do not want to own Lucid shares. I would sell a put to own shares. I would buy shares outright. I would buy calls. VIX is still too high. I would buy a call spread. So I would spend some money to bet on an upside move that would get me like a double or a triple. So how much do I need to start in trading options? First, you need to learn. That's what you do here. You don't need money to learn what I'm doing. You can paper trade for as long as you need in order to get bulletproof. So when you do get real money, you're not playing, you're not learning with mistakes, live mistakes. What I do, the way I write things up, you can do it in a small account. I mean, you can effectively do it with $5,000, but it'll be very restrictive. And the bigger the account, the better. The bigger account, the easier. I'll give you an idea. So I can make a small gain percentage-wise at a very safe distance from current price with a big account. It's hard to do that with a smaller account. So with a smaller account, you end up having to fight for every penny you make. Whereas somebody that has a big account can take, I'll show you exactly why. I'll show you in a second. So if I wanted to sell a put in Tesla, I can sell a put in Tesla for November and make thousands of dollars and leave 30%, 40% room for the stock to fall and still not lose money, if that makes sense. So the bigger the account, the easier it is to step away from current risks and take small bets that pay a lot in absolute terms, but lower in percentage terms. You know what I mean? Very safe bets, if you can use the term safe. There's nothing ever safe, otherwise there would be no reward, but relatively very safe bets with a bigger account. It's easier. Do I buy leaps? Okay, so how about we define leaps? Earlier I showed you options chain on CRM, I think, whatever, charge point, CRM. And it was like 3 days to expiration, today's expiration for the SPY, and 2 weeks expiration for the other two out. Well, they make them out 2 years. So you can go every month, you can go weekly from here a couple of months, and then after that you go monthly, most of them. After that you go a couple of contracts that are 2023 and 2024 sometimes. And those long dated calls and long dated contracts, they call them leaps. They're not magical. They don't have magical properties. They're just long, slow movers. The advantages for somebody that's a slowpoke, those work well. The disadvantage is if you buy a call that's way out in time, let's say you place a bet in the options, forget what call or put. If you place a bet in the options long term, and you guess right, and you make the same bet short term, you will gain so much faster in the short term one than the long term one. So that's the plus and minus, because if you get it wrong, you will lose so much faster. So that's the advantage of the leap is just, it's a disadvantage too. It's just a slower moving trade. So do I buy them? I personally don't like to buy them, but I currently own September, August, and July calls in several stocks that are up 170% or so, 150, including Facebook, SoFi, Palantir, and somebody. You betting security litigation? Does this affect reputation or stock? Okay, so you have to know something about me. I have another acronym. Basically, I don't trade news. News is for suckers. There's only maybe 3 or 4 headlines that really mattered in the last 10 years. The rest is just bullshit. Yeah, excuse my French, but it sure is. What the news does, it just causes you to pay attention. That's it. They want to, like CNBC, the all important Fed minutes. Are they all important? You're not going to learn anything new from the Fed minutes. They recount things that happened 3 weeks ago, which we know about, which they came out and said, this is what we talked about. This is what we decided from that day. And they answered questions. And then they had about 30 speeches. And then they released the minutes from before all of that. How is that all important? It is not all important. It's BS. But they get you to watch CNBC to find the all important minutes. And then they have the balls to say, today we learned that they are committed to raising 2 times. That's what the guy said 3 weeks ago. We will raise 2 times and we have 6 months worth of asset dissemination. You didn't learn that today. If you didn't learn it today, you didn't listen to the dude back then. You didn't learn anything from the minutes. Yet it's the all important Fed minutes. It's not. So I don't trade headlines on litigation, especially from investors who are suing the company because they lost money in the stock market. What judge would give them right to earn any money? What? You need to be, what? No, that is not nothing I would, hey, Gregory, that is nothing I would pay attention to. Now, if you tell me the litigation is about them not being able to sell a product, that's something you have to pay attention to because that changes the bottom line of the company, right? So if Peloton was sued to not be able to sell any more, whatever, treadmills, that's an important piece of information. But they weren't. They were sued about something else. So, Gregory, you're already a member. What are you doing here? I appreciate it. So the idea, anytime you want me to discuss this live during the session, let me know, Greg. All right. So this is, the news is not important 99% of the time. You can go ahead and get plastered. If you think CNBC is giving you advice for your own good, you're wrong. They cover stuff that gets eyeballs. It's not evil. It's just how things work. They're in the business of advertising. They cannot sell advertising unless they have people watching. They cannot get people to watch unless they're saying flabbergastic things. Oh my God, you will not believe what the guy will say after we come back from this commercial. And then you come back from the commercial and the guy doesn't say anything important. And you go, what? I thought he was going to tell me the meaning of life. So they make mountains out of molehills because they get more attention. Nobody's going to watch the news. It's like, nothing's going on, but you should watch. We're fun people. Nobody says that. Like they don't say, watch it because we're going to give you a trade that cannot lose. They don't say that because they wouldn't do that. They tell you what just happened. Oh, they are buying the so-and-so call and you go out and buy the call and you lose money. That's because he just sold it to you as it went wherever it went. He's been long and then he tells you where it is and everybody goes there and then he gets out and everybody's happy. It's just how it works, I think. I'm not from Wall Street. You can tell I don't like Wall Street very much. I'm an engineer that figured this stuff out on my own. The chart things, I put my skills against the top notch of them. I may not know the terminology of everything, but I am bulletproof with my charts. I am super good at reading the open interest and the volume because I do it all the time. Right. And I just have a knack for it. And I can help everybody else in the group make better decisions. I told you I have traders in my group that are way better traders than me. They're faster, they're more decisive, they have more scans, which I don't have because I'm doing all this stuff. But luckily, I have 300 people in the room pitching me ideas. What do you think of this? What do you think of that? Like somebody came to me with a stock that I've never heard of. So I added it to my list, XME. I was like, that is a ticker I may trade, actually. I've never seen this stock before. And it's a metals and mining ETF. And it's important ETF because the metals and mining is in the news. I was like, maybe I can make an epic trade in this thing. This is a monthly chart. This is 2011 levels. Last time they were here, they failed miserably. Had I known about this last month, I would have shorted it, but I didn't. Speaking of shorts, I closed my dollar short today. I shared it with the team. I said, I'm shorting the dollar right here. And I said, I'm buying a $28 put on the UUP. And it just was an amazing ride. So this morning, the UUP was up a little bit. So I closed my bet because I have a lot of profits, and right now it should find support. So if it bounces, I will reshort. But if it continues on lower, so be it. I missed out on some upside. That's fine.
Nick, and some of the people are asking about education, but I don't know if we touched this, but every trade that you give, you always provide a full backdrop of technicals, macro, micro, all of that.
So the education piece, I already blabbed about it earlier. Basically, let's say I was recording a video on how to trade Upstart today. I would say, all right, this setup is about Upstart, but first let's look into the overall macroeconomic conditions. I said, I've been saying that the S&P has support and should come out to about 420 eventually, but it did go too fast. Friday, it should have failed at 408. It didn't. Wrinkle. So I should assume that they're selling rallies. So there's that's going to play against any long I might choose to take right now. So assume that in the next couple of days, the S&P may have the opportunity to sell. So every stock I have to trade up or down has to work within that. So if I pick Upstart, it's not likely going to rally if the S&P is correcting, right? So I need to know what the S&P is going to do. And then I say, okay, so today's setup is for Upstart. And then I'll recap. You remember we traded it here long, we traded it here long, and here it is crappy. And I said I would buy shares, and you had the opportunity to book, I don't know, 100%, 120%, a couple of times. I said, and then I would say, what if I'm not long that stock yet? How do I handle this? And then I would show my lines, and I would say, okay, so I would assume that as soon as they cross this prior failure, like they tried a couple of times to get out from 55, once they start, they might fill this gap. What does that mean? They might gain $20 pretty quickly just from thin air. There's nothing here. Even back then, I don't think there's much. There's a lot of there's not a lot of volume, a big hole in volume. Look, these are volume bars. Look, there's no volume here. Look at the volume here, nothing here. So as soon as they get into nothingness, there'd be no resistance. They go whoop, straight up. So I'll say I'm long. If I'm not long, I want to get long. How? I can wait for the breakout and chase it. Or I can buy the dip if it comes. Or I'll offer a credit put spread that would not need a rally. And then I would say I would add a call or a call spread after the breakout. I said, and then I would say, or I can just get long now if I'm good stopping out. Some people are not good. They take a position and they sit on it until it's 90% wrong. And then they come and say, how do I hedge this trade? You can't hedge this trade. It's dead. So this would be my sharing. All these details. It'll be pictures of the options. It'll be a table with all the options way to do it. So if it'll be a complete picture, and that whole video will be about 15 minutes. And I would show what it means to sell a put. Like I would say, if I wanted to own shares at 40, I would sell a $40 put. And let me tell you what that means and what's the responsibility of the put seller. And I'll go through one of those for fun, and you guys are going to get flabbergasted. Ryan is asking, what do the volume bars color blue stand for? Okay, so first of all, this study here is called Volume Profile. If you want to learn a new study that's actually worth something, that would be one, because they say price is truth, right? That's what price is. So let me show you what it means. These volume bars down here, everybody knows what they are. They tell me when things happen. Like they tell me that, oh, on earnings, there was a lot of volume. Yeah, duh. Okay, so how about where the volume happened? So these bars, it's the same data, except they tell me where they happened, at what level. So I know that there's a whole bunch of people that love it between 70 and 90. I know there are a whole bunch of people that love it down here. And I know in between, there's no conviction. So that's information that's useful. So as soon as they get out from this chunk, they should be able to bum rush everybody into that area and fill the gap. Now, somebody's asking, what's the difference in color? It's not important at this level. It's upticks and downticks. Like Did it happen on an uptick or a downtick? So if you want to delve into it, that's an extra level of knowledge. The first piece of knowledge is to see the node, the places of importance. And that number changes if I zoom in, because all this recent action is down here. So there's nothing up here, but that's normal. And there's also intraday. If you can see this here, you can see them. So 2 hour, let's go to 15-minute candles. You see it here, the same volume bars for each day. So here it tells me that day, which was Friday, 49.50 was the most popular line right there. Today, 52.80. So tomorrow when it rallies, if it rallies, it hits to 52.80, 53, it's going to find sellers because there's a whole bunch of people up here waiting to trade it. On the way down, if they hit a big node, there'll be support. Like this is support. Okay, so that's volume profile. Very important study, very. TLT 125 expiration. Are you asking me or are you telling me? You're welcome, Ryan. What is the question? So the TLT, if you don't know what that is, this represents, quote, bonds, bond prices. When they say they're raising rates, this should fall. Because if rates rise, that means yields are rising, most likely. That means this falls. So the opposite side of this would be something like the TBT or the TNX, where they track the actual yield that the bonds pay. So there's a relationship, inverse relationship between the bond price and the yield it gives. So if the 10-year yields 3%, the price will fall. If the 10-year rises, the yield rises, then the price falls. So if the TNX rises, this is falling. It's an absolute relationship, 1/1. So today, it looks like there was some rate hike fears, or at least that's how one can interpret them, because rates rose. So if you look at the TNX, it must have had a pop. Boop. See it? And TLT, drop. That's always the case. If you don't believe me, let's test that. TNX comparison, they should be moving in opposite directions. They are. This one drops, this one rises. This one drops, this one rises. They just at a different, see? Anyway, trust me on that one. They do. Maybe if I go to 5 minutes, it'd be easier to see. Yep, drop, rise, and then they come together. So I don't know if you're asking me.
And someone here is asking really quick about the chat room, Nick. If they join, let's say they're trying to learn to trade options, but they're only trading stocks or crypto, if this is something that would benefit them.
I'm watching my son starting a motor that I don't recognize. He's a gearhead. Crypto, we trade crypto. I recently traded crypto. I shared an easy, sounded like a motorcycle. I sure hope he doesn't have one here now. Anyway, I shared a bullish Bitcoin trade via Bito, not because I'm bullish Bitcoin short term. In fact, I shared the Bitcoin trade last November. I said, I think it's falling into 20. And I laid out the pattern that will get us to 20 on Bitcoin, and it's playing out to a T. The key number now is 46, that they were never able to recover, 46,000. So once they lost 46,000, they tried to recover it here and here and here. Remember that AMD scenario I told you? Picture that that's the 104, 100, 104. It's the 46,000 on Bitcoin. They popped one time to 48. And I said, no, don't bite yet. And then it came back. And I said, if it loses 33, which was entry point 1, which delivered 40%. I said, if it loses 43, it goes to 25, 28. It went to 25 and bounced, 25.9, 25.7, whatever it was. And it bounced. And I said, and now repeat the same process at 33. So if it cannot recover 33 convincingly, it's probably going to lose this one and come down to here, and everybody will make the news on it. Oh, it's dead, it's gone. And that's when you you pounce, because I don't know what's with people. Are they stupid or just emotional about it? They love to trash this poor thing. And it's the best performing asset by far for the last 10 years. Nothing even comes close to how well this thing does. Even after a giant drop like this, it's still thousands of percents above where it was before. So I don't know why they have this mental block. And why 20? 20 is easy. I can tell you why 20. Remember when it went to 20 and collapsed and they made fun of it and it went to whatever, 3,000, and then it went to 20 again and then went out to 60 or 65? Well, it never came back. How cool would it be to come back to test 20, overshoot a little bit lower? So I'm leaving dry powder. I am long coins. I have a good entry point, knowing that I wasn't going to nail the bottom and knowing that this was my third time loading up. So I had actually my fourth. I had 3 30+% runs to the upside that I booked, traded. This is me accumulating a position in Ethereum, in some Solana. I had CRO. I didn't sell them, but I'm not adding. So if you want to trade it straight up, use Bitcoin to trade all the rest, or just use Bitcoin. And today I had a conversation. You don't need to buy a full coin. If you think you can't trade Bitcoin because you don't have $60,000, you can spend $100. They'll give you a part. So you can have a chance to play around with $100. It'll be the most fun you ever had in your life. I love trading Bitcoin. On top of it, I was collecting 10% yield on my stable coin. Then the government just recently, on April 15th, April 17th, I think, ended that. Freaking government. Anyway, they ended that. Now it only pays 3%. So now, the bond, the bond from the government pays 3%. By the way, you can collect 10% from the government, like 9.6 on the I bond. Look it up. It's pretty interesting. Up to 10,000 per social. If you do it online. If you do a paper form, it's less. So check into it. It's pretty cool. And but I think you have to lock it. You can redeem it after 5 years, no penalty. So you have to make sure that you don't need the money. So Bitcoin is not a buy until it goes above 34-ish and holds it. And in fact, I went to Vegas with the gang for FinTwit, the conference, and I was a speaker there. And one of the platforms I spoke at, afterwards, I had a get together with a couple of the people that wanted to ask me follow-up questions. In fact, they ended up joining, even though I didn't have a sales slide or anything. And the person was talking about Bitcoin, and he said, "Do you do crypto?" I said, "Yes." And I think it's going to 34. So from the lows. And today it alerted me that it's, good things are happening, that it could get there. So I would not be surprised to see it get to 34, but don't bite. Okay. I'm long already, so I'm not adding. I will add my last batch closer to 20. So maybe tomorrow it dips one more time and then it takes out 32.4 and it goes to 34. That would be ideal, because I don't think this is a legitimate test of 33. This. That's what I wanted to test. And usually when they test it, they overshoot. So I want them to go to 34, maybe even 36 and fail, like they did with 48 right here. Remember, 46 was the line to beat. They went to 48 and they couldn't hold it. They tried again, they couldn't hold it, and then whoosh. That's what I want to see here. If they fail at 34, 36, they come back and then whoosh down. Whenever everybody's freaking the fudge out, that's when you look at adding a good size position. Okay, so the the Bitcoin trade was easy. Just use Bito. Bito is an ETF that should track the futures on Bitcoin. So if you want to go long Bitcoin, how cheap is that? It's pretty freaking cheap. Premiums and the options are cheap. Just be aware that options degrade over time. Okay, what else you got? Tell me, hit me with, what are we now? Whoa, an hour and, wait, we are over 2 hours already? I'm looking at the time. Wow. No, an hour and 20 minutes. An hour and 20.
Yeah, and we were only supposed to be here for an hour. So, everything that you want to stay extra here for the chat members.
So I'll take two more tickers if you guys want, and we'll call it a day. And here's what I want to say. listen, I've been working with Benzinga for a decade. Join, and if you don't like it, they will give you your money back. I guarantee you that you will learn new stuff from day one, and you will leave a much stronger trader. Carvana, okay, we'll do Carvana. Go. Roger, when you say June puts, do you want to buy the puts or sell them? Buy them. Nujaim, are you Lebanese? I am. Yep, high five. You can't get into my room. Only one Lebanese per room. We can't be together. History says we will be fighting at some point. CVNA. Okay. Whoa. Okay. I know what to say about CVNA. So CVNA, if you look at the PNL, is like, whoa, that's freaking impressive. Check it out. Look at the income statement. The income statement is basically how business is growing. And it's what? Look at this explosive 14 billion. And then you look at the bottom line. Well, are they bleeding? No, they're just losing 350 million. But given the growth here is incredible, right? All hunky-dory. No. And then you come in here. I have questions. What's this? In order to deliver whatever they delivered, so operating results, that means being in business, buying, selling, overhead, the back of the house, the administrative, whatever they did in the background to deliver those unbelievable results, you can't hide it from your cash flow from operations. In order to get things done, what did the cash flow happen? What happened to the cash flow from operations? They had almost a 3 billion hole. You don't want the liability to be growing as fast as your sales. So there's something weird going on. My guess is that they're borrowing a lot in order to grow. Well, if that's the case, and if the Fed is really raising rates to high heaven, how much can they borrow to maintain the same kind of growth? And if they don't maintain the same kind of growth, how will people react to the stock in it? So on the face of it, it looks dirt cheap, but I would be scared. So here's the statement. If Carvana is rallying, so are the markets. So I don't want to risk money on Carvana. Now, the second part, if you're already long Carvana, I would not add. You don't know what's happening, okay? There's a reason why the stock market hates it. We don't know what it is. You're saying this is a bottom. I say somebody said that here. So if you're right and you just went long and you get a rally to 60, get the hell out. It could come out to 160, but I would definitely lock profits, book it, lock it, take some off the table, whatever. This is a stock not for me. Now, if you want to trade it because you know something inside and out, please feel free. I'm just giving you my interpretation of what I'm seeing in the P&L. On paper, it looks good. Descending wedges like this usually break out in a monster way. Internals are not that great. The RSI is showing some improvement, but not much. So it's the kind of thing that goes like on a headline maybe. So if you want to buy a few calls, maybe to relieve the itch, that's the best way. There's a reason why there are numbers that are negative here, because that's a hideous chart. So be humble with your assumptions. Now, if somebody goes long on one assumption that, hey, it was here in the pandemic, then you know when to get out. If it falls below the pandemic low, you know to get out. I'm okay with that. But if you're doubling down on an investment that's already costing you a lot, I think that's a mistake. All right, so this is how I would interpret Carvana. Shorter term, there are some lines to trade. I think rallies into 3150 will be sold. I think they will lose, they will bleed into 2750, 2650, and see if you can hold that. Lose that, you make a lower low. So now, even on this chart, the bulls are not in charge. Be careful. That's Carvana. I hope that helps. GoGo. I don't remember anything about GoGo. Let's go to, wow, that's a daily, that's a year's worth of data. Woof. What is this? Is this the Wi-Fi company? Looks like. What is going on with this income statement? How come sales fell off a cliff and they stabilized? It's weird. So I don't know what's going on with this thing. The chart is a mess. I would never go long a stock that's going into a peak failure like this. If they fell from here to here, they recovered half. That's not a good entry point. A better entry point is when it falls into the support, maybe. If it loses that support, it comes back and fills this gap. So you're saying you wanted to buy puts June 17th. I don't mind it. You just need a reason. Why June 17th? Do they have an earnings report? So your target is 19.5 and maybe 18.6. So if you're that fast, yes. 17 strike. I think that's too low. If I were you, I would pay up and do it here and then put a tighter stop. What does that mean? I would rather pay a little bit more and risk more money here and say to myself, if I drop X%, I'm out, versus buy something that's statistically not viable. So let me go and give you the statistics on that. All right, let's go to $17. Go. Buy the 17th. No options available. Wait, I mistyped it. GO. Okay. Ooh, thin options. I wouldn't trade that in options. There's just not enough action. Anytime you pull up an options chain on a stock and it does not have weeklies, it's an indication that it's not a good stock to trade with options. 17, there is, according to the platform, according to the Delta, which is your odds maker, there is about a 10% chance you're going to make money. So not make money. There's about a 10% chance that price is going to be there in 17 days. That's too low for me. I'd want to be at somewhere between 19 and a half. There isn't one. So I would buy the $20 put right here and stop out. But I wouldn't do it. It's not for me, but it's doable. So how fast are you? That's the bottom line. Okay, let's see here. Roger. Oh, that was you ordering both. Okay. No, that was it. Roger needed the go. Anybody else? One more Sava? Let somebody else have a turn. If nobody else pops in, we'll do Sava, and that'll be the last one. Marvel. Okay. Marvel. I think they reported recently, right? Yeah. So I had a trade. When was that? Oh, in March. That's old. You can delete that. Delete that. Marvel. Okay, we'll delete that. That's old. Stop out. It broke through support. I'm trying to get reacquainted with the stock. All right. So here's the easy story on Marvel. The bears are in charge. How do I know that? They're selling rallies. Rally sold. Rally sold. Rally sold. Rally sold. Rally sold. Rally sold. Rally. Aha. Are they going to sell it? If you force me to trade the stock right now, I would short it. Short it responsibly. I would say down is easier. I would say sellers are lurking between here and 62.5, 63, even more at 65. I think rallies are opportunities to fade. If I'm long from here, I'm booking just in case. I'm locking. Now, fundamentally, I think they're doing okay. They're growing sales and they're losing some money, but that doesn't worry me as much as them bleeding if they are. They're not bleeding. Look, they have $1 billion, almost $900 million of positive cash flow from their operations. That is not a bleeding company. Whereas the other one was losing $3 billion. So statistically, not an expensive company. So my statement is, if the stock markets are higher in the future, this one has the opportunity to be higher. Technically, it's just under the gun right now. Shorter term, it might be a different story. So let's tackle 65, 63 first and 65, and then get some breathing space. You take this out, then you can recover the trading pattern. Let's see here, 15-minute chart. See, the bulls are trying to make a run of it. 30-minute chart. I don't like this. Why leave that? So don't be surprised to see it at 57.50 and buy it into 56. So I would buy the dip here. In fact, I'm going to put an alert here. T1 harm, what's that? 30, filling gap too early. BR. So I want to buy the dip to swing it back up to see if it can take that out. If the markets are rallying, I think that's the path it will take. I don't know if it's going to fill the gap, but if it does, I'm all over it. It might stall here, come back to here. This will get us to here. But in the process, you have to trigger that guy. So I'll stop here. And then I'll put another line over here. Progress. Breakout, progress, neckline. These are notes to myself. So I don't care about them making sense to anybody else. So the idea is
Right.
I did it, struggle to come back to here. Take that out, you overshoot with a lot of potential resistance right here. So I'm going to borrow this and take it down to here.
Yeah, and Bonnie, yeah, and guys, if you have questions, I maybe right now would be the best time because Nick is going to be heading out here in a few. Bonnie's asking, is it for brand new traders that don't know anything really?
If you don't know anything, like anything about anything, and you want a whole year to learn something, I think you won't be disappointed. That's my opinion. So it might sound gibberish to you at first. A lot of it might sound gibberish, but I'll try to focus you onto what is important for you at that level.
Roger, we only have the chat room where you can talk with Nick all day.
So
good question.
if you're off, but if you're in the chat room with me, you get everything I do because I'm in there sharing everything in there. I post everything in there. So bang for the buck, it's freaking dirt cheap. If it was me pricing it, I promise you it will be thousands a month, not a year.
Well, I mean, this is still midnight, so it's gonna go up after midnight,
Yeah.
guys. But
the value, I am comfortable, I am confident it's there. I would be shocked if you don't become a better trader out of this. I'd be absolutely shocked. Even if you're good now, you might be better than me now. I bet you there's something to learn in my group from being there. And it doesn't get cheaper than that.
yeah, so Kathy, good question there. Do your
Yes.
package have video or other lessons? Yeah, do you have educational videos from Nick that he keeps updating, live sessions Monday
I
to
have
Friday?
evergreen videos, probably about 12 or 14 or 15 of them, and I keep adding to them. Every video setup I share is a lesson from start to finish, and I usually point it out. Listen, this is a good lesson. If you're not looking to trade the stock, just follow the lesson and follow the words. You're basically getting 3 to 4 extra 30-minute and 20-minute lessons a week just from my actual real life trade setups, which you will not take in real life because you're learning. You will take with fake money, paper trading, however you do it, write it down. Yeah. And then after doing so many of them, you feel you get the concept, then you venture in with one contract.
That's a really, really good way to just squeeze into that.
So
Kathy,
if you're looking to learn, this is a great place. If you're looking to trade with fun people all day, every day, this is a great place. If you're looking to talk shop with people who know what they're doing, I dare you to find better harmonic traders than a couple of people in my room. Not me, other people. I dare you.
Yeah,
you
Kathy's
won't
saying
find them.
It's mainly for options trading learning, right? But yes,
No,
it is. But you teach other
options
stuff.
is my focus, but there are people in there that do not do options. There are a band of people that just do shares. They short shares, they buy shares. And I have a few that are staunch futures traders and some that are good blend of everything. So I focus on options because that's what I promised when I first started the project, 2011. And we're still here. So I couldn't be BSing my way through this for whatever, 11 years.
Yeah,
so
good question.
The video lessons are there. The one-on-one explanations are there. The Sunday sessions are there. The ad hoc reports. So if you ask me, hey, can you, so last week, 2 or 3 people came to me with tickers, one of which I can remember, Microsoft. So I said, all right, here's how I trade. And I shared the trade and we traded it. I think Marriott was also a trade and we set it up and they both won. I can't remember now. Oh, I shared a trade to short the S&P for today and it worked out. I shared it, I think, on Friday in writing. I said, simple trade. Here's how I would do it. This is whose portfolio would fit. and I shared it and it worked out. So don't be bogged down with the fact that I like to do options. I think I can't describe it, but thank God that they will offer you a way out. I promise you, they don't play games. I mean, they're a big company. So no questions asked, money back. All you have to do is just commit. Why isn't it a free trial? Because you don't get engaged. If you don't have something on the line, you don't give it a fair shot. That happened to me. I took a free trial on a platform called Symbolic. Pretty good platform. It was free to try out. 2 weeks, I logged in one time. So I never gave it a shot. So if I had whipped out my credit card and charged myself $1,000, knowing I would get it back at the end, I would have given it a shot. Same as you go to a hotel now. I just went to Vegas. I told you they charged me $750 up front. Basically, here's what we're going to take from you unless you don't do this. It's like, that's not very pleasant. But the same concept. I was on the ball, making sure not to do whatever they don't want me to do.
Nic, on the YouTube chat, David's asking, what if you have been trading for 2 years but not profitable? I feel like I'm insane repeating the same thing and expecting change. I'm so disappointed. I would have a good week of trade and lose it.
Okay, I can help make you more consistent, because all I can say is, before you trade, come pitch the idea to me. You can do it in private. You don't have to share it with everybody. And I will join you, and we'll be in trouble together, or we'll profit together. So what do you have to lose at this point? Nothing, because you'll get your money back if you don't get what you want. Okay, so I'm accountable to what I say and what I post in my room, because I know there are 300 people watching. So when I'm saying I'm doing this, I better think 3 times before I share my idea with the rest of the people, because then I'm accountable. I'm on record. I just said that, and it's pretty embarrassing. So what I'm saying is, if I'm trading alone like you have been, you would forgive your own mistakes a lot easier than if you were sharing your ideas with other people. So I invite you to join and get your money back if you don't like it. I mean, it could be a solution for you. Just having an extra person or 280 extra people to throw your idea against. Like this morning, the market, before it opened, I think Brad jumps in and says, I'm hesitantly long Amazon shares pre-open. So he bought the very bottom and Amazon. The market opened, somebody pops in who didn't see Brad's post. Ryan, I think, he said, I'm long Amazon calls, blah, blah, blah. And he made 90% of those calls, but he shared his entry. So he didn't come back and say, I made 90% of my calls. Nope. He said when he took them, close to when he took them. And then if you just followed him from then, you probably made 60% because he was already just long. So they're sharing their trades. They're comfortable with that.
Yeah, and that's really what happens. You know, you've been helping these people, and the chat room's been there for about a year, maybe, or something like that. So there's people that have made some great progress there, and that's some good stuff there, Nic. Well, yep.
No, I was going to say, and we don't always agree. Like, he's long Oxy, I'm short Oxy. He's winning on that, I'm losing on that, and I'm fine. I only need to be right once later, and so I don't give a crap about it. So I said earlier, I promised, I said I would share my short on the USO. The USO is the oil, is an oil ETF. And it just spiked today on news that blah, 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 whatever the news was. And I'm shorting against this candle and those. And how did I short it? I sold the call spread. So I don't need a drop. And when I shorted, it was at 87, maybe, wherever at the high of the day. So I should probably have greens already, but I didn't check. And I just needed not to go above 89. That's all I needed to do. So if it just dips to here, I'm anywhere. If it doesn't do this, I make my profit. I don't need it to drop. I just need it not to go boop. Anyway, so that's it. So I'm tapped out. Thanks for your time, folks. Hopefully you will join. And if you do join, jump into the chat room, say hello. First thing you do is tomorrow, you jump into the chat room in the morning before the market opens. I share a write-up. with lines for today, with comments about today, what to look for, jobs report, preview of the jobs report, some Case-Shiller index, whatever is coming out. We'll discuss that a little bit. And then I'll share the live room meeting. Yeah, right there. So you will see also GME reports. So we'll discuss that. And you will see the trade setups. If I have them, they'll be there, what you're looking at. And the resource page is, you can't miss it, is on top. You go to getting started, you have that, all the videos. So what's a call option? What's a put option? What's a spread? What's a credit spread? What does it mean to have an AM settled or cash settled security? What type of trade is best for me? How do I book? How do I lock? How to swing trade and all that. So I should do one for iron condors as well, probably this week. All right. So that's about it. I've enjoyed today, but I need a break. And so does my dog. My dog is thinking, where the hell is he? I haven't seen him all day. Luckily, he's old. He can't walk too far. All right, sir.
All right, man. I'll see you in the chat room tomorrow, Nick. Thanks for everything here you do for the folks.
Absolutely. I appreciate the time. Nice to meet you, Roger.
All right, folks. There you have it. Nic Chahine, lead trader from the Benzinga Options Inner Circle chat room. So if anybody does have a question, feel free to email. I'm going to put the link in the chat, folks. And, we'll carry on with our day here. David, yes, he does trade futures, and he does put the charts of the futures there as well. Yep. 1 second here, folks. All right, so I'm going to put the link here in the chat. If anybody does, sorry, that's my cat. If anybody does have a question, reach out. No worries, just send an email. Keep in mind, right now the office is closed, but send an email and I'll make sure to respond to you if you have questions on joining the chat room. I can help you out with that. This is until midnight, and keep in mind you do have a 7-day money back guarantee. So technically, you can try this risk-free for 7 days and see if it's a fit, if it's a community that you'd like to trade with, right, on a daily basis like we do. All right, folks, thanks a lot for being here. We'll see you guys next time. And for all the folks that membered, we'll see you guys in the meeting, in the member meeting tomorrow, early in the morning with Nick. We'll see you guys next time.